Good morning. It's Friday, October 18th, about 6 a.m. Central Time. I'll be on the Schwab Network at about 2:40 p.m. Central Time discussing the precious metals, cryptocurrencies, and energy markets and an outlook for next week. Also on Monday, I'll be on Yahoo Finance between 8 and 9 a.m. Central Time, most likely covering either the metals or the energy markets. So overnight, the precious metals, they exploded. So after yesterday's all-time high in gold, volatile trading session in the silver market and lackluster performance in the copper. Yesterday I had let you know that if you watch the metals minute, that in the first minute I told you that it's a new day and another high probability for an all-time high in the gold market. So we saw the ECB, they cut rates yesterday. That boosted the dollar index and paired most of the gains against other currencies. So we saw everything from Australian dollar, British pound, euro currency, Japanese yen, all dipping. Remember, the dollar index is a basket-weighted currency against other foreign currencies. So we also saw the U.S. retail sales number come in at 0.4%, beating analyst estimates. And what that did was it most likely cemented the 25 basis point interest rate cut at the next November 7th meeting. So it wasn't a miss. So we didn't see anything as far as a 50 basis point emerge. And it wasn't a blow away enough number here to start to take away from those expectations of 25 basis points. Now, the initial claims number, that really got no love, and it's holding at 241,000. I think that the media and the way the perception is that the hurricanes did impact it, and they're looking at it as a negative environment in the economy. So they're kind of avoiding the discussion of the deteriorating labor market. So the overnight price action, December gold up $20 at $27.28, about $1 off the high of the overnight session. That's up 75 basis points. December silver up 58 cents, just made a new high a second ago. 32.36 last, that's up 1.83%. Copper up 6 cents at 4.38, that's up 1.39. Platinum up 1.5% at 10.21. So looking at a couple concerns. One, we had no real economic data coming out today. So what I do is I run a price volume volatility model in the overnight session here from day to day. And what I'll do is I'll look at the differential between the previous day and today's, and then I'll also look at what the expectations are based upon different surges in volatility. And we have no real volatility events coming out here today, so we are at the top end of the range on most of these commodities. 438 on copper, 27.26 on the gold market, so we're slightly higher than that. 32.33 on the silver market, slightly higher than that. These are the things that I post in the Metals Edge. So you look at the next level above it, and what it's going to be is how does the 8:30 open in that surge and that rush into the metals, does it unfold, and do we get that acceleration and volatility boost up? That's what we're going to really want to watch here. Now, if you look at other commodities and other asset classes, crude oil futures kind of finding a home on either side of $70 at the moment. Call it catching its breath and waiting for new developments, most likely in the Middle East or the direction of the economy. We're going to be looking at crude oil futures from a longer term perspective, because the farther out you go, the cheaper you get. For instance, that March contract trading right around $68.50. We're going to start looking at calculated risk call spreads out that far, and then also starting to layer in, going down to what we perceive is a kind of neutral zone in the crude oil market, call it 65 to 60. We think OPEC will be getting a little bit uncomfortable there, and then also it's a little bit cheap given the strength of the economy we're seeing. So now what caused this run up in the precious metals overnight? Well, it was China. Remember, they're the second largest economy, and they posted an acceleration of better than expected growth. Remember, it's the rate of change of the economic growth and the numbers that are being reported that really boost these markets and take them higher. So they had better than expected retail sales data. They also had better than expected industrial production. The retail sales grow at 3.2%, better than the 2.5 growth rate that most analysts were predicting. Their industrial production, and that's most important to copper and also silver, and aluminum, which is up here quite a bit this morning, and palladium up about 2%. So we're seeing their fixed income growth also come up, their urban unemployment rate ticking down a notch. In their third quarter of GDP, it grew at 4.6%, which was about the same from last year, slightly above analyst estimates here. The rate was the lowest level since the middle of the year, and it is moving somewhat closer to Beijing's 5% annual growth target. So looking at a few things here that are coming out today, nothing really in the US. We've got building permits, housing starts. We've got one Fed speaker coming out. The CME's Fed Watch tool we look at is at a 90.7% chance that the Fed cuts 25 basis points, only a 9% chance that they leave rates unchanged. So most likely the foundation that we're looking at is 225 basis point cuts at the end of the year. So November and December, we'd really need to see some earth-shattering misses, especially on unemployment rate ticking up, non-farm payrolls crashing and burning, and things like really coming off as far as the inflation data. However, remember, inflation data somewhat lags, and we had some elevated readings on things like oil and gas and other commodities out there. So we might see a small uptick. So one thing that a lot of clients, and a client had mentioned to me yesterday, was the gold silver ratio and why is it at 85-1. So you look year to date, you got gold up 27%, you got silver up 27%, gold up 25%. So silver is outperforming gold at the moment. The gold silver ratio is at 84-1. And then you're looking at, you had this brief dip into the 70s in May. That was during the copper squeeze. So it's the flows that matter most in order to get the ratio moving. Okay, the flows have been going into the gold market rather than silver because of the different dynamics. And you start looking at different levels where we're at. Like if gold futures go up to 3,000, where does that put silver at? Well, if it's at $35, which is still going to be about a 10% move higher, and you take a 10% move higher on that gold market, it's going to be still at 85-1. If you go to $3,000 on gold and you go to $40 on silver, it drops it to 75-1. If you go to $3,000 on gold and you go to $60 or $50 on silver, you're going to go to 60-1. What did I do in all those scenarios? I dropped the gold silver ratio down. I kept the gold market static where it's at, and I boosted the price of silver. So the flows have to go into the silver market, and what causes the flows into the silver market is, I told you, and I've told you this 100 times, China is one of the most key components to the silver market. So you have an acceleration of growth in economic activity in China, and what happens is that silver consumption goes up. So your supply drops down. That's where you get declining supply globally. Then you get what happens is the retail investor comes in and they start buying silver. And then you get a more dramatic decline in those inventories and prices go up as demand just inches its way higher. And that's how you get the gold silver ratio dropping quite dramatically. So we're going to have to just wait and see here, because it's possible that the gold silver ratio stays where it is and we still achieve our goals of hitting these higher levels on the silver market. So don't let just one thing trigger you as far as the gold silver ratio is here and it should be that. Remember, these commodities work in a global sense. They've got a number of different checklists that drive each and every individual commodity. So you guys got any questions, reach out to me. Be sure to check out the TD Ameritrade or the Schwab Network later on today. I think that'll be a fantastic interview. And then if you got any questions, you want to work with us over here, you want to get some of our research, reach out, give us a call, 312-858-7303. Remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Have a great weekend. Thanks.